So here's the deal. If you're watching this, you're not the kind of person who settles for ETFs and index funds. You want the big swings, the outliers, the asymmetric bets, and neither do I. If you've seen the previous video, you know I don't chase safety for safety's sake. I risk big, but only when the payoff is meaningful. I'm the same woman who believes that high volatility can be the price of generational wealth. And when it comes to high-risk, high-reward plays tied to Bitcoin, one name towers above the rest. MicroStrategy, ticker symbol MSTR, or should I say strategy? Yes, they've renamed themselves from MicroStrategy to just strategy. It sounds a little confusing. Are they still a tech firm, a Bitcoin fund, a financial experiment? The new name says it all. They're betting everything on the strategy, not the software. No, MSTR isn't just a stock. It's more like a financial experiment with rocket fuel in the tank. It doesn't just hold Bitcoin, it amplifies Bitcoin. By the end of this video, you're going to understand how MSTR became the most aggressive Bitcoin bet in public markets, how it might outperform BTC itself, and what could cause it all to unravel. Because this isn't a fairy tale, it's a tightrope walk, but some of us like the wind at our back. MicroStrategy doesn't just sit on Bitcoin like a savings account. Since 2020, it's been on a mission. Raise capital, whether through common stock offerings, convertible bonds with ultra-low or even zero interest, or preferred shares, and deploy every dollar into buying more BTC. Best of June 2025, the company holds over 582,000 Bitcoin, which is roughly 3% of the entire circulating supply. Here's where it gets clever. When MicroStrategy issues new shares, it often does so when its stock trades at a significant premium to its net asset value. That is, the actual Bitcoin it holds. Let's say one share of MSTR is worth $1,000 on the market, but represents only $800 worth of BTC on the balance sheet. That $200 difference is the premium. By issuing new shares at that inflated price, MicroStrategy can raise more money than the BTC backing those shares. It then uses that cash to buy even more Bitcoin. As a result, over time, each share can represent more Bitcoin, not less. That's the opposite of dilution. It's accretive stacking. For existing shareholders, that means more exposure to Bitcoin per share. It's not just leverage, it's compounding leverage, engineered through a playbook of timing, market psychology, and debt-fueled conviction. Now, if you're newer to this, or that sounded a bit complex, don't worry. Here's the simplest way to think about it. Imagine you could buy a company that doesn't just own Bitcoin, but keeps finding clever ways to buy more of it, even when prices go up. And not only that, each share you own ends up representing more Bitcoin over time, not less. That's MicroStrategy's strategy in a nutshell. They're not just buying Bitcoin, they're using Wall Street tools, stocks, bonds, even preferred shares, to create a machine that keeps stacking more Bitcoin per share. If it works, your piece of the pie grows faster than if you just bought BTC yourself.
Let's talk about the Bitcoin NAV premium. That's the gap between MicroStrategy's market cap and the actual value of its Bitcoin holdings. This tells you how much investors are willing to pay over the true BTC value the company holds. When this premium is high, MicroStrategy can raise capital on very favorable terms, selling shares above their Bitcoin-backed value and using those funds to buy even more Bitcoin. That cycle is what allows the company to grow BTC per share over time. In 2024, that premium peaked around 3.5 times. In other words, investors were willing to pay more than 3 times the value of the company's Bitcoin because they believed the strategy would continue accelerating. Today, it's down to about 1.9x. That still supports the model, but just barely. If the premium ever drops below 1, it signals that investors no longer believe in the business enough to pay even the value of the Bitcoin it holds. At that point, MicroStrategy wouldn't be able to raise capital without selling off BTC or massively diluting shareholders. The entire engine grinds to a halt. That's why MicroStrategy isn't a passive investment. It's a market-driven machine, powered by optimism. When confidence is high, it flies. When it fades, the wheels can fall off. It's for those who understand that the very fuel behind this strategy, market optimism and premium valuations,
can also be its weakest link. If the market keeps believing in MSTR ability to accumulate more Bitcoin per share, the strategy snowballs. But if that belief fades, the funding dries up and the whole engine can stall. It's a system built on momentum, not stability, so you need to know exactly what you're signing up for. Michael Saylor isn't just a CEO. He's a man with a mission and a massive personal BTC stash, rumored to be worth over $7 billion. He suggested that if someone holds a massive amount of Bitcoin, and especially if it were his own personal stash, they might choose to burn the keys when they die. That would permanently remove those coins from circulation, acting as a gift or scarcity boost for everyone else in the network. What he called a pro rata contribution, and a legacy of economic immortality. He believes Bitcoin isn't just an asset, it's a revolution, and he's turned MSTR into a kind of Bitcoin black hole, using the mechanics of Wall Street to soak up supply. Zero-interest convertible bonds? Done. These allow MSTR to borrow huge amounts of money without paying interest, giving them essentially free leverage to buy more Bitcoin, with repayment deferred and tied to long-term stock performance. Massive stock offerings during price spikes? You bet. When MSTR trades at a premium to its net Bitcoin holdings, it issues more shares to raise capital that gets recycled directly into more BTC. The premium makes it accretive rather than dilutive. Preferred shares to pull in fixed income capital without giving up control? Already happening. These let MSTR attract income-focused investors by offering steady dividends, while protecting existing shareholders from voting dilution. And again, the raised funds go to buying Bitcoin. Every move Saylor makes is about increasing the number that really matters, BTC per share. Let's be honest, MSTR could collapse under its own weight. If Bitcoin crashes significantly, the company's balance sheet, built largely on BTC, shrinks, making its debt and obligations far riskier. If the Bitcoin NAV premium collapses, meaning the market no longer values MSTR above the value of its Bitcoin holdings, it becomes nearly impossible to raise fresh capital. That stops the Bitcoin stacking strategy cold. Regulatory crackdowns could also pose a threat. For instance, new accounting rules or tax laws on unrealized gains could force MicroStrategy to liquidate holdings or alter its financial structure. And finally, if Michael Saylor, the public face and core of investor trust, loses credibility or steps down, sentiment could shift rapidly. Each one of these risks alone might shake the stock. Combined, they could unravel the entire model. Critics like short seller Jim Chanos call it a Ponzi. But here's the difference. A Ponzi scheme uses money from new investors to pay off earlier ones with no underlying asset or sustainable strategy. It's a financial illusion by design. MicroStrategy, for all its risk, owns real Bitcoin. It raises capital and buys a publicly verifiable asset. The business model is aggressive, even fragile, but it isn't inherently fraudulent. It depends on market trust and a belief in long-term Bitcoin value. If that trust evaporates, the model can break, but it's not the same as a Ponzi, which has no asset behind the curtain. Still, the risks are real. Lawsuits, tax changes, shifting sentiment, anyone could flip the script overnight. But so is the upside. In 2024, Bitcoin rose roughly 126%. MSTR? It surged about 359%. That's still massive outperformance, and a glimpse into how this strategy can supercharge returns when everything aligns. This isn't just about riding Bitcoin, it's about outpacing. So should you buy MSTR? Not if you're looking for stability, but if you believe Bitcoin is still just getting started and you want exposure that scales faster, hits harder, and takes bigger swings, MSTR is your shot. The upside isn't just in the coins it holds, it's in the machine that keeps stacking more. And if that excites you, if that scares you just a little, you might be in the right place. Because here at Investment Club No Fees, we don't invest out of fear. We invest with hope, calculated, committed, and clear-eyed. Thanks for watching. And hey, If you're wondering how much of a high-risk play like this you should actually buy, we covered that exact question in a recent video called Smart Investor Use This One Formula. It's all about finding the right balance between risk and reward, and why the smartest investors often use this simple approach to avoid blowing up their portfolio. Check it out next if you want to sharpen how you place your boldest bets. Until then, stay bold, stay hopeful, and I'll see you in the next one.